What are the main types of economic policy? In today's fast-paced world, understanding economic policy is more important than ever. With recent shifts in global markets and inflation concerns, many are asking, what are the main types of economic policy? This topic is trending as governments and central banks respond to ongoing economic challenges. Let's break it down into the key types that shape our economies today. In macroeconomics, the main types of economic policy are typically classified into two categories: monetary policy and fiscal policy. These policies are essential tools used by governments and central banks to influence economic conditions. Monetary policy involves managing the money supply and interest rates. This approach aims to influence economic activity directly. It is generally divided into two types. Expansionary monetary policy increases the money supply and lowers interest rates. This strategy is often used during economic downturns to stimulate growth. For instance, central banks may reduce interest rates to encourage borrowing and spending. On the other hand, contractionary monetary policy reduces the money supply and raises interest rates. This approach is used to control inflation when the economy is growing too quickly. Central banks may increase interest rates to cool down spending and stabilize prices. Central banks, like the Federal Reserve in the United States and the European Central Bank in Europe, implement these monetary policies. They adjust various instruments, such as the bank rate, which affects borrowing costs for consumers and businesses. Fiscal policy refers to government decisions regarding taxation and public spending. This type of policy can influence the economy by changing tax rates or government expenditures. When a government increases spending or cuts taxes, it can boost demand and stimulate economic growth. Conversely, reducing spending or raising taxes can help slow down inflation. Fiscal policy is often used to target specific objectives, such as reducing unemployment or promoting economic growth. Governments may adjust their fiscal policies based on current economic conditions. Other types of economic policies include structural policies, which aim to improve efficiency and competitiveness in the economy. These policies may involve reforming institutions or labor markets. Social inclusion and equity policies focus on reducing inequality and promoting fair access to economic opportunities. These policies are increasingly relevant as societies strive for greater equity. Overall, monetary and fiscal policies remain as the primary tools for managing economic performance. Central banks and governments play key roles in shaping these policies to respond to current economic challenges. Understanding these types of economic policy helps us grasp how decisions made today can impact our financial future.